Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 381 on June the 27th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on TMC, the metals company, IREN Ltd, and Oscar Health Inc. And we discussed three new trades on BigBear AI Holdings, Rocket Lab USA, and Moderna Inc. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the markets were up more than 3% this week. The Dow Jones Industrial Average grew 1,612 points, closing the week at 43,819 points. The S&P 500 index gained 205 points, ending the week at 6,173 points on Friday. And now it's time for the topic of the week. The topic of the week is your current results. Now, I was reading a book this week that threw out a quote that stopped me in my tracks. It goes like this: "Your system is perfectly designed to get you the results you are currently getting." That quote is both obvious and profound at the same time. I mean, how often do you look at the results you're getting in life and acknowledge that it's the systems you're using that are getting you the results? I sometimes do that when things are working out. I like to think that I'm smart and I might reach behind my back and start giving myself a pat of congratulations. However, if you're not getting the results you want, do you actually acknowledge that it's the system you're using? Are you the type of person that keeps using the same system, hoping, expecting to get a different result? Thankfully, you're listening to a recording and we're not in a live interview. Otherwise, I'm sure many of us would have to acknowledge being somewhat delusional in how we live our lives. I hope you don't mind me sharing another thought that extends beyond trading. It's easier to apply this to trading. I mean, if you're using a system that is consistently losing money, then you need to change it. Don't blame the markets or the economy. Blame your system. Years ago, I had a personal trainer who would say, "Don't blame the workout, blame your diet." That was always an attempt for me to take responsibility for the results I was getting in the gym. Now, summertime is the perfect time to review the results of the year. Are you getting the results that you want, or are you receiving results that you don't want? If your system is working, keep using it. If it's not, you have 6 months to figure it out before the year is over. Now, if you're wanting help with a trading system for options, or you need to better understand options, shoot me an email and we can have that discussion. Socrates is quoting as having said, "A life not evaluated is a life not worth living." Hopefully, a little evaluation of your current system will lead to a life that's much more fulfilling for the rest of the year. So that's it for the topic of the week, and I'll stop trying to be a philosopher. Let's get into the review of last week's trades. We're going to start off with that cover call on TMC, the metals company, symbol T as in Tango, M as in Mike, C as in Charlie. At the time, the stock was trading for $6.56 per share. I looked at buying stock and selling the July 7 call at 70 cents, hoping for a return of 17.38% in 4 weeks. Well, shares of TMC grew 25 cents, ending the week at $6.81 per share. The call option we sold grew 5 cents, leaving us with a net profit of 20 cents if we were going to close the trade out immediately. We definitely want this stock price to continue moving higher over the next 3 weeks so that we don't lose money on the shares that we bought. The price is moving in the right direction so far, so all is well. There's no need to make an adjustment at this point. I'll definitely keep track of the stock price over the next few weeks just in case I need to protect a profit or avoid a loss. Next up, we have the credit spread on IREN Ltd, which now is going by IREN or IREN Ltd. That is symbol I as in India, R as in Romeo, E as in Echo, N as in November. At the time, the stock was trading for $10.47 per share. I looked at selling the July 10 9 put spread at 35 cents. That could give us a maximum possible loss of 65 cents per spread. Well, shares of IREN Energy grew $3.53, closing at $14 per share on Friday. The out-of-the-money put spread that we sold is now far out of the money. We originally planned to make a maximum of 35 cents on this trade, and that comes with a possible 65 cents of risk. Right now, we can close the trade out by paying 6 cents for the spread. We would lock in a 29-cent profit, which is nearly 83% of our maximum profit. This also means removing the possible 65 cents of risk over the next 3 weeks. I lean towards closing the trade out altogether. Now, we could definitely keep the trade open. The price per share is well above our break-even point, which is a good thing. Still, I'm a fan of locking in profit and minimizing risk when possible. This is a prime example of when to take the money off the table, and this trade is working out in a huge way, so I'll look to close it out immediately and take the profit. Finally, we had a debit spread on Oscar Health Inc., symbol O as in Oscar, S as in Sierra, C as in Charlie, R as in Romeo. At the time, the stock was trading for $21.23 per share. I looked at buying the July 2021 call spread for 60 cents, hoping for a maximum gain of 40 cents, or that would be a 66.67% return in 4 weeks. Shares of Oscar Health fell 81 cents, ending the week at $20.42 per share. The in-the-money call spread that we bought is now out of the money. Actually, the stock price is between our two strikes. The long strike is 42 cents in the money, but because we paid 60 cents for the spread, that's an implied 18-cent loss right now. Now, the stock price is below the break-even point, so you'd be justified in making an adjustment to this trade. If I were looking to adjust it, I would turn this long spread into a short one by selling the July 2022 call spread at 70 cents. Then I would immediately look to sell a put spread if the prices were high enough to turn this into an iron condor. A trader right now could sell the 19.5, 18.5 put spread at 30 cents. That would mean that one could take in $1 of premium, which would allow us to recoup our full 60 cents that you paid for the original trade and have 40 cents of premium left in the account. So your maximum possible loss on the trade would be 60 cents. You will have ultimately flipped all of the economics on this trade, which is hilarious. If you're at all bullish on the stock, it might be worth giving it a little time to continue its previous trajectory even higher. We have 3 more weeks left until expiration to see how this trade will finish. So it's always a question of which risk you are most comfortable with and what your account can afford. So that's it for the review of last week's trades. All new trades on today's show will use the July 18th expiration for monthly options in July. We're going to start off with the cover call on BigBear AI Holdings, symbol B as in Bravo, B as in Bravo, A as in Alpha, I as in India. The stock ended the week at $5.85 per share. I'm looking at buying stock and selling the July 6 call at 65 cents, hoping for a return of 13.68% in 3 weeks. Now you enter this trade by buying stock for $5.85 per share and selling the July 6 call at 65 cents. This trade makes the most money if stock prices finish above $6 per share. The break-even price on this trade is $5.20 per share. In real terms, the stock purchase will require $585, and you would collect $65 for selling the option. Next up, we have a credit spread on Rocket Lab USA, symbol R as in Romeo, K as in Kilo, L as in Lima, B as in Bravo. The stock ended the week at $35.38 per share. I'm looking at selling the July 35-34 put spread at 38 cents. That could give us a maximum possible loss of 62 cents per spread. Now you enter this trade by selling the July 35 put at $2.31 and concurrently buying the July 34 put for $1.93. This is a credit spread because we are selling the spread, and this spread makes the most money if stock prices expire above $35 per share. The break-even price is $34.62 per share. In real terms, you'll receive $38 per spread that you sell and have $62 at risk. And then our final trade on this week's show is going to be a debit spread on Moderna Inc., symbol M as in Mike, R as in Romeo, N as in November, A as in Alpha. The stock ended the week at $27.16 per share. I'm looking at buying the July 26 half 27 call spread for 32 cents. That could give us a maximum gain of 18 cents, or that's a 56.25% return in 3 weeks. Now you enter this trade by buying the July 26 half call for $1.81 and concurrently selling the July 27 call at $1.49. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $27 per share. The break-even price on this trade is $26.82 per share. In real terms, you'll pay $32 to enter the spread, and your maximum gain is $18 per spread. So that's it for this week's show. Thank you guys so much for listening. I did want to send out a reminder that next Friday, July the 4th, is a national holiday here in the U.S., so we are entering a 4-day trading week, so keep that in mind as you are managing risk, making trades. So 4-day trading week, I will still record a show next week. So thank you guys so much for listening. Have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.